Hi, my name is Jesse Durham, and today we're going to be addressing issues concerning business owners in particular, but I do also believe that these issues will translate to the household, to the investors, to those with a side gig or hustle. So let's start by talking about the banking function. Now, I didn't know, you may not know, you may be vetting this idea of the infinite banking concept as described in R. Nelson Nash's book, Becoming Your Own Banker. The banking function is our need for finance and how we address it. So specifically today, we will talk about business-related subjects. I've had multiple conversations with multiple different business owners this past week, and it's just really on my mind. There are always a great number of things that we want to be able to talk about on this channel, but today, business owners, you have it. So in your business, consider this: who controls the banking function for your business? Now, again, if you're not a business owner and you're tuning in, who controls it for your household? If you're an investor, who controls the banking function over your capital that you use for investing? So it transcribes to all these other different areas, but for the business owners out there, who controls the banking function? Okay, so that leads us to look at entities. Well, do you own a banking entity? Okay, and that means that we need to address, well, what is banking? Well, banking is just what? Loans, deposits. Okay, so that means we should ask, well, where do you as a business owner make deposits? From where do you make loans? Do you own that entity? Do you control that entity? These are great questions to ask as business owners. It's been said that the number one reason that businesses fail, and again, I don't know where you're at in your business, but whether you've been in business a day or many years, the number one reason that businesses fail, it's been said, is because of a lack of capital, funding, money, okay? And R. Nelson Nash always said that every business owner should be in two businesses, that you should be in whatever your business is, okay, performing whatever value of service or product that you are in your industry, in your field, and the financing of that business. So let's look at what's commercially, conventionally done. Okay, there are two ways of financing for your business, and we'll technically get to the third because of what we do on this channel, right? The first way is to go to a third-party lender or a commercial bank and expose yourself to their scrutiny to see if you are approved. That wording just it aggravates and irritates me now. And I've been there. I've done that. I've tried to get approval for lines of credit and loans and things before becoming my own banker. So I'm just saying, I've probably made every mistake that there is, both in personal finance and specifically even in the infinite banking concept in practicing becoming your own banker. But you expose yourself to someone else's scrutiny to see if you are approved for whatever amount that they deem necessary or available or that you're eligible for, to whatever terms they set at whatever interest, okay, from the entity that they own and control. So we are beholden to that entity. We're not an owner, so we don't get to participate in the growth, the dividends, the interest that the entity earns, okay? We don't have access to that capital to be able to use because we're borrowing somebody else's capital, okay? So everything is against us in that way, in that second business of being in the business of financing whatever our business happens to be. So if you're logging, logging is your first business, and then your second business is the financing of the logging. No, here's an interesting subject. Let me interject here. Make a study out of any big auto, okay, manufacturer, and look at the most productive part of those companies. Pick any name that you want, and look at the financing department of that company. The financing, the banking part of those companies is the most profitable. It's not actually any other part, which is very interesting. So it's an interesting study is what I'm saying. So there's that way to conventionally, commercially finance, where we borrow somebody else's money on their terms. We pay them the interest back. We are beholden to them. Maybe we get to qualify for something. All right. The other way is to be able to pay cash for what we do in our business. And all my cash is king, folks. And I mean, it's something to be proud of. Sure, it's better than being beholden to the third-party lenders and paying interest that, have interest dollars that leave our business that will never return, okay? But how that works is we put our capital somewhere that we don't own and control. We deposit, if that's in a bank. I mean, we don't own that bank. We're promised some form of interest, which we pay tax for. And but even more importantly than those things, we forfeit the opportunity to earn on that money. So to earn the pittance of income from interest on that money that will be taxed, we have to park it there. We have to leave it there for the bank's use while we forfeit the opportunity to use our money. So the whole idea of the infinite banking concept is to pay premiums to whole life policies with mutual companies that pay a dividend. All right. So we would be the owner of that policy. And with it being a mutual company, we're co-owner of the company. So any dividends that the company may experience from their general performance, we get to participate in and receive. Okay. And of course, there are guaranteed growth rates contractually in that unilateral contract of the whole life policy. And also we have access to the cash values of the policy immediately. So, and when I say immediate, I mean, it's like for a brand new policy from the day that it's enforced, that very same year, and it could be even, within 30 days that you start, okay, using the cash values in your policy for whatever your need for finance happens to be. So, one, we conventionally finance and everything is against us. Two, we warehouse cash somewhere that we don't own, that we don't control. We receive a pittance. So we lose a lot of opportunity there. And then the third is to do what I just described. Fund whole life policies that we own and control by paying premiums, wherein we have access to the cash values in that policy because it's been properly structured, okay? And that is key. That's why we educate the way that we do, again, pointing to Nelson's work, Becoming Your Own Banker, his book, and we put so much information that we do here open and out there on this channel so that you understand. I mean, it's becoming your own banker. I'm not trying to be your banker. I don't want you to be my banker. This is all about becoming your own banker, bringing banking back to the me and the you level. So the policy has to be properly structured for the banking purpose. I know how to do that. And, that's obviously part of what we do here. And then we educate on how to become your own banker, how you could consider using your policies for your needs, how you wish. So we fund those policies that we own and control by paying premiums, and we have access to the cash value in that policy to be able to buy equipment, hire new personnel, buy out a competitor, and whatever the case may be, whatever it is that we're doing to grow and scale and develop our business, okay? So let's consider that first scenario, either of those scenarios. See, it doesn't matter as a business owner whether you are conventionally and commercially financing everything that you do, or whether you are setting aside cash to buy cash, pay cash for what you want to do. In both of those scenarios, I'd like to ask some questions. If you're not practicing being the banker in your own business, whose business are you capitalizing? I mean, where are you amassing capital? Where do you put your dollars? Who has access to it? The banks do. See, regardless of whether you're financing with them and paying regular monthly payments for the next umpteen years, okay? Or whether you leave your funds for the next umpteen years, that's a southern word, If you're not from where I'm from, you very well may be laughing at me for saying umpteen. If you've never heard that, there you go. You're welcome. I am who I am. I say what I say. But for however many years, we're taught to either park our money somewhere, okay, or to go out and traditionally finance and pay for year upon year. Whose business are we capitalizing? Whose business are we scaling? Whose business are we paying interest to? I mean, if you dare, as a business owner, go and look last year at how many dollars you paid for anything that you have commercially financed for your business. I dare you to look for the past 5 years. If you've been in business that long, for the past 5 years, how many dollars have you paid from your business to capitalize someone else's entity that you will never get back? It's not a good feeling. And I don't mean to be harsh about that, but the reality is harsh. So the interest dollars that leave us never to return. I mean, how much more profitable would your business, and you know your business better than I do. I don't know your business, but how much more profitable, if you dare to look those numbers up, would your business be if every interest dollar that you paid for the past year was reincorporated back into your business for your use? What about for the last 5 years? If you had every dollar back that you paid in interest to someone else, if you had that money back and you got to keep whatever it was that you had traditionally, commercially financed, how much more profitable would your business be today? Now, I mean, let's keep walking that out, right? What if you received all of the principal for whatever you financed back? That's mind-blowing. I mean, I don't want to get too bogged down in interest, rates. I mean, there are so many important parts to answering who controls the banking function for your business. How, what kind of terms and control do you want to have over financing your business, and how comfortable are you relinquishing that to someone else? So to whom do you want to be beholden as the owner of your business? Who do you want to abdicate the banking function to? Or would it be more fluid, more convenient for you to be able to set the terms and conditions the way you would like by being your own banker? What if you could access funds from an entity that you own and controlled, and you could dictate how you would pay that back, how often you would pay that back, if you would pay that back? And I'm not saying steal the peas, okay? If you don't know that reference, read R. Nelson Nash's book, Becoming Your Own Banker, because it's a very important reference. So I'm not saying steal the peas, but again, there can't be enough said about control over the banking function, okay? Terms, conditions that you get to set, you being the banker, right? But then also, what if you receive the capital back? What if you could get the interest back? What if you receive the dividends for the general growth, of another company that you are co-owner with, okay? The mutual company, the mutual insurance companies that you decide to do business with. So I don't believe that enough can be said about all of these different aspects that would help you to scale your business, that would improve the profitability of your business. In fact, R. Nelson Nash would commonly say that whatever business you are in the business of, if you would also become your own banker, you would beat out the competition. There would be no chance for a competitor to be able to compete with you, because you could just move at such a faster pace. You could just move with so much more profitability in what you're doing. I mean, what if you buy a mower and you got the money back? What if you could hire new people and get the money back year after year for the salaries that you're paying? I mean, just what if you could scale your business? What if you could buy out a competitor? What if you could buy some land? What if you could get the money back for your overhead? What if you could pay your taxes and get that money back? I mean, just what if you could get a portion of what you spend as a business to run your business, okay? To run your business. What if you could get a percentage of that back? How much more profitable does that make you? And if you could do that year after year after year, and it grows and it expands and it gets better, if it contractually could get better year after year, if you would just pay yourself first, pay yourself with interest, and recapture all the money, just play honest banker, recapture all the money. And if it just improved year after year, I mean, what would that look like in the next year, in the next 5 years, in the next 10 years? So again, when I asked whose business are we really capitalizing, when I talked about, either if you're a cash paying business person, where do you keep your cash until you use it? Okay. A commercial bank. If it's at a commercial bank, aren't you really using your funds there to pay for the landscaping of the bank, for the personnel employed by the bank, for, the beautiful building itself? I mean, for every dollar that we deposit in the bank is loaning out multiples of that same dollar. Okay? Multiples of that same dollar. So for our pay with cash business owners, for every dollar that you deposit in your bank, multiples. I mean, what if your business looked like that? What if every dollar that you received as a business produced multiples of itself? Not your employees, not you with your own two hands, but what if your dollars could do that? That's the essence of becoming your own banker, is what I'm trying to say. And for all of the business owners that are conventionally financing things for your business in your business, again, aren't your payments for your equipment and such that you've commercially financed, isn't that what's paying for the air conditioning in somebody else's business? Isn't that what's paying for the landscaping in somebody else's business? Isn't that what's paying for the benefits and the salaries of other people's employees? I mean, how soon would you like to be able to get more employees for your business? So again, without working any harder, without taking on any additional risk, without changing your cash flows, okay, without losing control, you can begin practicing the infinite banking concept so that you earn in more than one way. Okay? People can earn an income. And if you employ more people, you're leveraging other people's abilities and time to earn for your business, okay, if you're the business owner. But also the dollars, okay, the cash flows that you have, the income, the revenue, the profits that you have, can also create more money as well. Again, remember what I said about the banks. So you could be earning in those two ways. And again, I'm a big fan of if a dollar can do more than one task. I mean, if we can buy a new piece of equipment and get that back with interest while keeping the piece of equipment, did we work any harder to do that? Did we change our cash flows? Did we take any additional risk? Is anything stupid happening in that scenario? So these are things I'm just for food for thought, trying to get us to consider as business owners. Now, naturally, I can't talk about business without addressing tax, just like I couldn't address households or individuals or investors without addressing tax. And I'm not a tax expert, but what I do know is that taxes exist and they are paid. So if we could pay taxes as business owners, as we should, okay, but we had a system that we could control, that we owned, where we could get that tax money back, how much more profitable does that make our business? Okay. And in thinking long range, I mean, why do you have a business? I don't know, but ask that for yourself. Why do you have this business? Is it so that you can provide an income on your terms with perhaps a greater amount of opportunity of income than if you were an employee yourself, to eventually be able to sell it, or to be able to pass it off to a family member? Is it a family business? I don't know, but I'm asking you to think long range. Well, what if you could build up entities in the here and now that would help provide for your need for finance in the business here and now, but that would ultimately lead to a tax-free transfer of wealth? What if the death benefit from whole life policies that had been properly structured for the banking purpose in the here and now were used for that purpose, providing for your need of finance in your business, but then it also ended up with a tax-free transfer of wealth because of the death benefit that your heirs or your beneficiaries would receive? And how would that look like with your business? So there's some great things to consider there as well, in thinking long range, as Nash always encouraged us to, especially as business owners. Even even in the event that you sell a business and that provides a taxable event, causes a taxable event. And again, I'm not a tax expert, but what I'm saying is if you've used whole life policies that you own and control that eventually culminate in, and of course you can't disregard the tax-free access that you have with policy loans in the here and now, tax-free access because of policy loans here and now for the financing of your business, but eventually, of course, as well, receiving your heirs, your beneficiaries receiving a tax-free transfer of wealth from the death benefit as well. That could be used to offset anything that you have come up in transferring your business, your traditional business. Those funds, those tax-free funds, could be used to help, provide time for the transfer as you would like it to happen for a much more static asset such as a traditional business. And importantly, I would ask, what gives you anxiety in your business? I understand that the thrill can be exhilarating for us, overcoming the challenges of growing and scaling and working in or on a business can be exhilarating and exciting. But if there's something that gives you anxiety in your business, payroll, needing to get equipment to be able to scale your business, not feeling like your business is able to move at the pace that you think and that you dream and that you plan. So again, Rome wasn't built in a day. You eat an elephant one bite at a time. Not everything happens at the snap of a finger. And yet, if we are in two businesses, like Nash said, in whatever our traditional business is, and in the financing of that business, if we get into both of those businesses, you would be surprised at how much faster you can move when you're moving at the pace that you choose as your own banker. If you are systematically and strategically amassing capital, accessing that capital, employing it for some business purpose that grows your business itself, but then also because of the system and the entity that you own and control, you can recapture the funds for that procurement back into your business, which just causes you to grow and scale, grow and scale, grow and scale. Okay, you'd be surprised at how much better that would get. Nelson would always say you would beat out your competition. So I hope that these talking points have been helpful. I know that I've had multiple conversations with many different kinds of business owners, even this past week, clients and potential clients. So again, if you have something that you would like to share, I'd love to read about it in the comments on this video. And if you would like to be able to have a conversation about how you could apply the infinite banking concept into your business to become more profitable, to be able to have more control and ownership of what it is that you're doing, I'd love to be able to have a conversation with you. So you can reach us at durhamtalents@gmail.com or on phone 828-817-4223. And I do look forward to that conversation. And I hope you have a great day. Take care. Hi, my name is Jesse Durham, and today we're going to be covering business topics. Now, I believe that all the same can truly translate,